I want to start by emphasizing the sheer scale of this earnings report. We are looking at a record-breaking quarterly revenue of $57 billion.
$57 billion. That's a 62% jump year over year.
And the market reaction tells the story. A strong beat on sales, guidance that was much stronger than expected, and an immediate rise in the stock. We are witnessing something historic.
We really are.
Welcome to DeepResearchGlobal.com podcast.
Today, my goal is to give you, the investor, a really focused analysis of these financial results for the third quarter of fiscal 2026.
We're going to synthesize these documents quickly and explain why these numbers matter, not just for the company, but for the entire tech sector and your investment thesis.
We're looking for confirmation that this AI boom is not just sustaining itself, but that it's actually accelerating.
So let's look directly at the headline numbers for Q3, which ended October 26, 2025. Revenue, as we said, a record $57 billion.
And that beat analyst estimates of about, $54.9 billion?
By a healthy margin. And it's up 22% just from the last quarter.
That sequential growth is so important. It shows the acceleration's happening right now.
And then there's the earnings per share. The non-GAAP EPS was $1.30. That topped the $1.25 estimate.
A solid beat there, too.
Yeah.
But the number that I think is critical for investors to track, the one that tells the real story about their market power, is the gross margin.
The non-GAAP gross margin hit 73.6%.
I mean, 73.6%.
Right.
For a company that primarily sells hardware, that is just a key metric for profitability. It shows incredible pricing power.
Okay, so let's get into the engine room. The core investment story here is, without a doubt, the data center segment.
Absolutely. That segment posted record revenue of $51.2 billion.
$51.2 billion. That alone surpassed all expectations and represents a staggering 66% rise compared to a year ago.
And I find the breakdown of that revenue critical. You have to look inside the number.
Right. So $43 billion was from what we think of as compute, the GPUs.
But $8.2 billion came from networking components. That's not a small piece of the pie.
Not at all. And it shows that their integrated platform approach is working powerfully. It's not just about selling the best chip.
It's about selling the whole system, the whole factory.
And the commentary from the CEO, Jensen Huang, just confirms this thesis of, well, insatiable demand.
I was struck by how direct his language was. He said, and I'm quoting here, Blackwell sales are off the charts.
He also said cloud GPUs are sold out.
When a CEO uses this phrase like sold out, it sends a very clear signal. Demand is outstripping their massive supply.
He also confirmed the company has, in his words, entered the virtuous cycle of AI.
Right, where compute demand across both training and inference is just accelerating and compounding on itself. It's a feedback loop.
Now, what truly moved the shares after hours wasn't just the past performance, it was the outlook for the fourth quarter, the forward guidance.
And this is always the future signal for investors. The key number here is the revenue projection. They're projecting $65 billion plus or minus 2%.
That guidance is significantly higher than the $61.6 billion that analysts were expecting.
Much higher. And on top of that, they expect those non-GAAP gross margins to keep rising.
Up to 75%.
75%. That indicates their pricing power remains incredibly strong, even as they scale production to these unbelievable levels.
This brings me to the strategic side of things. The documents detail several massive commitments that I believe are vital for reducing investor concern about, market saturation.
These deals solidify the data center's future revenue streams for years to come.
Let's talk about some of them. First, OpenAI. A strategic partnership was announced to deploy at least 10 gigawatts of Nvidia systems.
10 gigawatts
Yeah.
for their next-gen AI infrastructure.
And then there's Anthropic. For the first time, they're adopting 1 gigawatt of compute capacity with the Grace Blackwell and Vera Rubin systems.
That's a huge new customer win, a major player.
We're also seeing partnerships with industry leaders like Google Cloud, Microsoft, and Oracle to build out America's AI infrastructure with hundreds of thousands of GPUs.
And then there's Solstice. That's the U.S. Department of Energy's largest AI supercomputer.
Which Oracle is building, featuring 100,000 Nvidia Blackwell GPUs. These aren't just orders, they are foundational infrastructure projects.
And this is a key point, I think. This is not just a GPU story anymore, it's a platform story.
Exactly. The company is actively introducing new architectures and technologies that cement their lead,
We saw the introduction of the Rubin CPX, for example.
which is for massive context processing, a whole new workload.
The Nvidia Q3, which is fascinating. It's designed to integrate their systems with quantum processors. They're already thinking about the next paradigm shift.
And we see that platform strength in networking too. Meta, Microsoft, and Oracle are all using the Spectrum-X Ethernet switches to boost their AI data center.
So they're locking in the entire stack.
There's also industrial AI, a collaboration with Deutsche Telekom to launch the world's first industrial AI cloud. And they're teaming up with Palantir for an operational AI tech stack.
It's really expanding beyond the cloud, Janet.
Right. And while the data center is the main driver, I have to highlight the other segments. They show really robust growth, proving the technology is penetrating various markets.
Gaming, for instance. Revenue there hit $4.3 billion. That's up 30% year over year.
Professional visualization grew 56% to $760 million.
But the one I'm watching closely as a key future area is automotive and robotics.
Me too. Revenue there was $592 million, up 32%.
And the standout detail for me was the partnership with Uber.
To scale a level 4 ready mobility network starting in 2027, they're targeting 100,000 vehicles.
100,000 vehicles. That's a massive long-term design win that validates their entire automotive platform. It's a huge deal.
Okay, finally, I want to briefly reassure investors regarding capital management, the balance sheet.
Incredibly strong. Nvidia returned $37 billion to shareholders in the first 9 months of the fiscal year.
And that was through share buybacks and cash dividends.
And they still have $62.2 billion remaining under their share repurchase authorization. So a lot of flexibility there.
So to sum this all up, I've shown you that the Q3 results for fiscal 26 confirmed overwhelming demand across every metric that matters.
From revenue and guidance to the massive strategic partnerships being signed.
The investment thesis, which is based on this virtuous cycle of AI, it remains firmly intact. In fact, it seems to be accelerating.
The demand is real and the runway looks long.
Thank you for listening. Subscribe to deepresearchglobal.com for more latest business news briefs, company analysis, and investment insights.